Good day, welcome back to my channel. If this is your first time of coming across this channel, please endeavor to like, to click the subscribe button and share the video so that others can also benefit from the video. If you have any question, please drop it on the comment below. So now here we want to look at the concept of correction of error. If you have watched my earlier video on trial balance, we took time to talk about trial balance. We discussed trial balance as a list of balances. Trial balance. Talk about trial balance as the list of balances extracted from the ledger account in order to check the arithmetic accuracy of the entries in the ledger. And we talk about that under normal circumstances, to show that the entries in the ledger are correct, the debit side and the credit side of the trial balance supposed to have an equal balance. However, that the debit side and the credit side of the trial balance have an equal balance does not mean, or it is not a conclusive proof that there is no mistake in the entries. That there is no mistake in the entries. Therefore, under this video, we want to talk about majorly the two types of errors. We have the error that affect trial balance and error that does not affect the trial balance. So we have majorly two types of error. The error that affects trial balance and the error that does not affect the trial balance total. So but in this video, in order to make the video not to be too long, in this video we are going to concentrate on the error, the number two, the errors that do not affect the agreement of the trial balance. So under this error that do not affect the agreement of the trial balance, there are the error that can still exist in the account, and at the end of the day, the trial balance total will still agree. That's why I say that the agreement of the debit and the credit side of the trial balance is not a conclusive proof that there is no error in the account. So we have about 6 major errors that can still exist in the books of account even when the trial balance total agree. So one of those errors is the error of commission. The error of commission. So the error of commission is the type of error that occurs when a transaction is recorded on a wrong personal account. When a transaction is being recorded on a wrong personal account, we will say that the error of commission has been committed. For instance, assuming that a credit sale, we made the credit sale to Mr. James. We made a credit sale to Mr. James for 500 naira. And of course, you know that the double entry for this transaction is to debit Mr. James' account because he is our debtor, and to credit the sales account. Supposed to debit This is the entry we're supposed to pass for this transaction. But unfortunately, Mr. James' account was not debited, but instead, Mrs. Jane account was debited. Assuming now we put it in a ledger. So what I'm trying to explain is that the entry we're supposed to make here is to debit Mr. James' account because he's our debtor, and then credit the sales account. But unfortunately, instead of debiting Mr. James' account, Mr. Jane was debited. This is what is called the error of commission. Assuming now this was the error committed, and here we have so for you to correct the error now is that in an account, cancellation is not allowed. So whenever a bookkeeper makes mistake, he is expected not to begin to cancel. It's not allowed in accounting. You are expected to just pass an entry and then correct the error. So for us to correct this error now is that we are going to debit Mr. James' account with 500 naira in the name of Mr. James. We come to the credit side and say, Mr. James, so that the corresponding entry will go to the main owner account. Because it is credited here, it will come to the debit side of Mr. James' account. So under Mr. James' account, we record it using Mr. James' account, showing that there is a transfer of this amount to here. Ladies and gentlemen, this is how to correct the error. By recording this on the credit side, recording this on the credit side have already cancelled this one. And by so doing, you have already transferred it to the main owner. This is how to correct the error that relates to error of commission. Another error is what is called the error of omission. Error of omission occurs in a situation whereby a particular transaction was completely omitted in an account. Assuming that the transaction was a sales or purchases, either sales, either cash sales or cash purchases, assuming it is a cash sales. The normal double entry for cash sales is to debit the cash account and then credit the sales account. But in a situation where it is omitted, just go back and do what? And pass the entry. The reason why it is called the error that cannot affect trial balance is that since no entry was made in the initial place, so the bookkeeper have not done anything to warrant the disagreement of the trial balance. So it is not going to affect the trial balance. So when such error are being discovered, the correction is to go back and do what? And record it. Another error is, this is two, is the error of principle. The error of principle. This is a situation whereby a particular transaction is being recorded in a wrong class of accounts. A transaction is being recorded in a wrong class of accounts. Such an error is said to be an error of principle. For instance, motor expenses being recorded under motor vehicle account. Of course, you know that motor expenses is a nominal account. while motor vehicle is a real account. And so both of them are not the same thing. The real account, which is motor vehicle, is an asset account, while motor expenses is an expenses account. So, assuming that the figure is 1,000 naira, motor expenses ₦1,000 cash. The double entry for this transaction would have been to debit motor expenses account and then credit the cash account. On that cash account, debit it with motor expenses. And then when you come over to the motor expenses, you debit it in the name of cash. 1,000 naira. But unfortunately, what was done was that instead of debiting motor expenses account, motor vehicle account was debited. And the reason why the error did not affect the trial balance is that both the motor expenses account and motor vehicle account always have what? Have a debit balance, because motor vehicle account is an asset. Because an asset always have a debit balance, and motor expenses account is an expenses account, and expenses always have also what? A debit balance. So the double entry principle was actually followed, but even though it is in a wrong way. So that's why it did not affect the limits of the trial balance. But this is how to pass an entry to correct it. So in a situation where it is like this, since you have already debited the motor vehicle account, what you need to do is to come over to the credit side, and then in the name of motor expenses, you say motor expenses 1,000 naira. By crediting it like this, you have already cancelled what you recorded earlier, and then you will now transfer it to the motor expenses account, because since you recorded it here in the name of motor expenses, it means that the corresponding entry will go back to motor expenses account, and since it is credited there, it will come over to the debit side of the motor expenses account. Then another error is what is called the error of compensation or compensating error. Compensating error. Compensating error is a type of error committed in such a manner that the net effect of that error, both in the debit and the credit side of the trial balance, will amount to nothing. What I'm trying to explain is that the compensating error is a type of error committed in such a way that the net effect of that error, both on the credit and the debit side, amounts to nothing. For instance, if a particular cash transaction was overstated by 1,000 naira, by 500 naira, and then in another occasion, a sale account was also overstated by 500 naira. Of course, you know that cash is an asset and will always have a debit balance, while sell is a nominal account and it will always have it's an income account. Sell is an income account and will always have a credit balance. So since the debit side is being overstated by 500 naira and the credit side is also overstated by 500 naira, it means that the error will compensate each other. The error will cancel each other. That's why it is called a compensating error. The fifth error is what is called the error of the original entry. The error of the original entry. This type of error occurs in a situation whereby the bookkeeper erroneously recorded a wrong figure during the first entry of that transaction. The bookkeeper mistakenly recorded the wrong figure or wrong amount during the first entry of that particular transaction, assuming that a cash sale or cash purchases of say 5,000 or 54,500 naira was mistakenly recorded as 55,400 naira. This is the original figure, but the bookkeeper mistakenly recorded this amount, and with this amount, the double entry was passed using this wrong figure. So for you to correct this type of error, you have to check the difference between the correct figure and the incorrect figure. Of course, this 55,400 minus 54,500 will give you 900 naira. And so for you to correct this transaction now, we have to consider whether is it an overstatement or an understatement. Of course, you can see that 55,400 is higher than 54,400. So it is a case of an overstatement. So for you to correct such an error, you have to say cash account purchases the normal double entry for this transaction, cash purchases, would have been to debit the purchases account and then credit the cash account. Debit the purchases account and credit the cash account, because the cash is going out. You are using the cash to purchase the goods, so cash is going out. When an asset is decreasing, you credit. But when an expense is increasing, you debit. So we're supposed to debit the purchases account and credit the cash account. But now, because it is the case of an overstatement, so we are going to reverse the entry. So how are we going to do it now is to say, we come over to the purchases account, and in the name of cash, put cash 900 naira. You can see that instead of debiting it, we are crediting it. We are crediting it to reduce it since it is an overstatement. But when we come over to cash account, we are supposed to have a credit balance. We will debit it in the name of purchases. We are debiting it in order to reduce it because it is an overstatement. But take note, if it is an understatement, what you would have do is to pass the normal entry by debiting the purchases and crediting the cash account. But the reason why we reverse the entry is because it is a case of an understatement. And the last error is what is called the error of complete reversal of an entry. The sixth error complete reversal of an entry. This type of error occurs when an account that's supposed to be debited are being credited, and an account that's supposed to be credited are being debited. I come again. The error of complete reversal of entry occurs in a situation whereby an account that's supposed to be debited was credited, and an account that's supposed to be credited was debited. Assuming that we have a transaction that said cash said 1,000 naira. The two accounts here is cash. The two accounts, cash account and the sales account. So what we would have done is to debit the cash account and then credit the sales account. But mistakenly, what was done was that the sales account that's supposed to be credited was debited. So it was debited in the name of cash 1,000 naira. And coming over to cash account that's supposed to be debited, it was credited in the name of sales 1,000 naira. For you to correct this type of error, you have to multiply this figure by 2. So as it is 1,000 now, you multiply it by 2, it becomes 2,000 naira. And then you now record it in the opposite side, the debit side. The reason is that for you to go back and correct this error now, if you record 1,000 naira on the debit side, you have not made any entry. What you have just done is you have just cancelled the initial 1,000 naira and you have not made any entry. So what you need to do now is to times it by 2 by saying 1,000 naira times 2 gives you 2,000 naira. So when you come over to the debit side, you now have sell 2,000 naira. What happens here is that 1,000 naira here will cancel out 1,000 naira here, remaining the original 1,000 naira that's supposed to be here. And when you come over also to the sales account, the same thing, you recorded here using sales 2,000 naira, showing that the corresponding entry will go to the sales account. So when you come over to the sales account, you credit it in the name of cash. ₦1,000. Ladies and gentlemen, this is how to correct error relating to complete reversal of entry. If you are correcting the error using general journal, you are also still going to use this principle. The only thing is that, assuming this cash sale, what you would have done there is to debit the cash and then credit the sale account. Ladies and gentlemen, this is how to correct the error that does not affect the agreement of the trial balance. In my next video, I'm going to talk about the error of the trial balance total, a situation whereby you will have to use the suspense account to correct the error. But for now, we are stopping here for now. Please endeavor to click the subscribe button. Please share the video. If you have any question, please drop it on the comment below. Please, thank you for watching.